Hello, YouTube. Is another massive bear trap being set? We're looking back to a pattern from exactly 3 years ago in November of 2020, which led to a 45% rally. And now we're seeing that exact same thing set up here, a higher low and close over the previous candle high. We're going to go through and explain all of this today, but at a very high level, what this basically means is that the boxes we're pointing to have a very similar pattern to last time. The saying is that history does not repeat itself, but it often rhymes. And what's so notable about here is that there's just so much that looks so consistent. I'll go through that right now to show you. First thing is that we get a couple of red candles in a row, and then we go up. Over here, we have 3 in a row. Over here, we got 2 in a row. What's notable about this as well is that the percent decline is very similar from high to low and from high to low. We're looking at about 10.5% back to 2020. It's just under 11%. And now in 2023, we are currently down by about 10.5%. So the pattern matches, the percent matches. And the other thing that matches is that we actually go to a new 52-week high. In this case, it's actually a new all-time high, blue sky breakout. Well, we just did it freshly on Friday. We printed a new 52-week high, which means we're starting to go up. It's only the beginning of the month, so we don't want to get ahead of ourselves. But man, these bears seem like they just don't want to let go. And now I'm going to show you my secret weapon. My secret weapon is actually our system called the algo.com. So what I want to do is actually to show you a very quick preview from our promo video, which explains how our system works, because every arrow shows where we got an investment alert on the S&P 500, and then every red arrow signifies where we actually got a sell signal. And most recently, we got a strong invest alert on S&P going back to the beginning of November. So what does that mean? It means the market's ready to go up. So if you want to take advantage of our biggest sale of the year, we have about a couple hours left. It's going to end at midnight tonight. And part of what you're going to get will be available on this video if you want to go and watch that. But you also get access to my personal portfolio. If you want to pause the video, we can see exactly what's going on here. I've got a lot of names. I've got almost only winners. And there's no surprise in what I do. I follow very set criteria, but this weekend I'm going to go through and try to give you those high-level notes to show you exactly how and why that bear trap might be getting set. If you could do me a huge favor as we're getting started as well, if you could please consider smashing the thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. All right, so now with all that out of the way, we want to go through and provide a little bit more evidence to try to explain exactly the reasons why we could be going higher from here. I've talked about this before, and I'm just going to briefly go over it because I think this is getting a little bit tired now in terms of the seasonality chart. November is traditionally the best month of the year, and December is traditionally the second best month of the year. The part that I'm a little bit less sure about is this portion right here, where we've been looking at our daily chart quite extensively, and what we basically have is a period where we go sideways, and then we go down a little bit, we come back up, and then we back test our previous tops. That's resistance. It turns into support when we come in for that retest. The reason why I find this quite notable, we're going to deviate over here to our daily chart for a minute, and I'm going to pop over to ES just because I know I have this chart nice and clean here. So what do we note? I want you to just pay attention to what is similar here. So we're going to flip to a line chart so we can compare apples to apples. I'm now going to go to this most recent period. I'm going to snap this line. And again, please follow along. I'm going to leave you a lot of valuable little tidbits as we go through the show. So please make sure you stay tuned all the way until the end. Hopefully have the attention span for that because we're pretty much setting up what the pattern's going to be going into 2023. All right, here we go. There's our low. We get 1, 2 higher lows, and then we get a breach of our uptrend, which means we go down a little bit. All right, so that should be very obvious. Now let's go here to the S&P 500. What do we have? There's our low. There's our higher low, there's our second higher low, and there's the breach of the uptrend. It's a little bit harder to see purely looking at a line chart. So if we go back to the candlestick, one low, higher low, third low, and then we break the uptrend. So what's different about this time versus last time? Again, the saying is that history does not repeat itself, but it often rhymes. So does this rhyme enough? Does it look similar enough? I think it does. We got the low, higher low, higher low. We got the break of the uptrend. We get a squeeze higher. And let's go back here to a line chart to show you exactly what I could be looking for, because then we're going to pop back to our monthly chart to see if we're going to deviate this month, where exactly we're wrong, because the bear trap's actually going to be if we do go down and then we just pop right back up the fresh highs, because I believe that this most recent period, if we do dip, that might be just enough evidence for the bears to think, that's it, we're right, time to pile in, time to go big or short. We don't have to look very far to find evidence about this. For over a year and a half now, going back to June of 2022, they've just been shorting it as low as 400,000 contract short. They went all the way to net long. And then as soon as the rally started, right, the 10% move off the low, they're like, screw it, we're going short again. And that's fuel for the market to go up. Why? Because they're wrong. And right now the market's pointing higher. So if we get this little move lower, I think, again, not I know, but I think that'll be just enough evidence for the bears to think, yeah, I'm right. And we're going to go all the way down to the lows and even lower. That could really be devastating for the bears. But as bulls, that's beautiful for us because it means we're going to make more money. So the part I'm less sure about is if we're already squeezing up to that high now, what it noted in here is just that we get some extreme volatility, high, low, higher, low, higher, low, and then we dip down. Well, what do we have here so far? We are flat like a pancake, then we go all the way up. The risk that I could see is that we're now going to get a move lower, start to do a little bit of this, and then we recapture and go higher. Now I'm going to leave you with this valuable piece of information because I want you to pay attention to that one other part. If you're a bear or if you're bullish, here's the part where both teams are wrong. So as of right now, we've poked over our recent high. That's why we're at a 52-week high. However, if we do repeat this part, the bulls are incorrect unless we go back up and we make a new 52-week high, which basically means 460 SPY. That's our confirmation that resistance is turned into support. Unless this happens, the only way that the bulls are going to be correct is if we continue to be green on the month. Now, let me show you that here on the monthly chart because I want to make sure the story is so simple that's hard to ignore. If we have a look here, if we remain green on the month, it means that we're over the previous candle high of 458.32, and we closed over that at 459 here on Friday. So as long as we remain green on the month, it means that we're in a 52-week high. We're continuing the pattern going back to December of 2020. Look right here really closely. So if we look at these two candles, we get that massive November, which is right here. There's our massive November. It's right there. And then into December, we get marginally higher highs. The size of the candle is not nearly as big as November, but it's still not bad. And the part that I'm noting here is that we're going to look in a little bit closer now. Let's zoom in. I know it might be a little bit hard to see if you're looking on your phone. So looking here, how do we start the month off? Well, we actually started with a gap. So we gap to a new blue sky territory, and then we actually back test the close from November 2020. The close is 362.06. Our low here is 362.03. We back tested it and went 3 cents lower, and then we just never looked back. So why is that? Why does that matter? Well, let's look to our most recent pattern now. Let me get all my lines back, delete them again. Let's now zoom into our most recent pattern here in 2023. Well, because we actually got a gap down. So we've already tested the close of November. We already have a marginally lower low, which means if we go down and revisit it and then we lose it, that's not good at all. Why is it not good? Because that would be the first part right here. It would mean that we're going for a move lower. And if we're red on the month, that would be a failed breakout. What's a failed breakout? We make a new high, but then we fail to hold it, which means we poke over the November high, then we fall back below. That's not bullish. It's not bullish unless we do this, unless we go down, come back up, and then go to a higher high, which means basically over 460. So to keep it so simple, it's hard to ignore. If we're green in the month for the S&P, default is bullish. If we go red in the month, we have to print a monthly lower low to invalidate this pattern because the bulls are definitely playing defense. So now let me just explain something really faster because I think this is a part that people really forget. This chart is looking at a 1-month candle, which means we have to wait until December 31st to see this next candle. But is there a pattern on a shorter time frame we can look to for some clues? Well, yes, absolutely. Here's a bottoming pattern, and then we get an expansion signal. All right, let's go through on the weekly chart to see exactly how that happened. Because as I mentioned, our system called an algo alert, and it called it right here. So it called it in the week of the S&P 500. I'll actually pull it up on the other screen so you guys can actually see that just to make sure you believe me, because I know a lot of people say they have the hottest tips in the market. I can tell you we got the hottest tips, period. All right, let's go here. We're looking at S&P and NASDAQ. So we got an alert for the S&P 500 going back to October 9th, and we got one on November 3rd, and then November 3rd for the NASDAQ. So we got all of those. And that's the beginning of October. And then we got a second one here in November. So 1 month later. So where's October? Oh my goodness. So we got one right here. And then we got the lower low, and then we recaptured it. So all that means is that the market's now ready to go up. Let's look at this pattern a little bit closer, because then we're going to go back to the monthly, and I want to make sure you can see that these candles form once a week, which means there's our bottoming pattern. And now we're only going to look at two things. We're going to look at something called defense and then something called offense. In my opinion, when the bulls are playing defense, it means they're defending the low, higher low, higher low, higher low, higher low, higher low. Why would that be defense? Because they're defending at a higher area than they did in the previous week, which means they're willing to buy, step in to buy at an area higher than they previously were. They're defending the chart. They're defending the higher low. Okay, so every single week since the October low, bulls have played defense. 100%, they've played defense. On the monthly chart, since we formed our low, what do we have? Low, higher low, right? The candle's not closed yet, but we have that higher low pattern forming here. Now let's look back to this period, because this is the one that I'm saying is so similar right now. If I'm right, do we see that same pattern here? Low, higher 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 low. Oh my goodness, that's most of the move. And then what happens? Lower low, bullish engulfing. There's our blow off. So this part right here is the blow off top, but the part where we melt higher is very well defended. There is not one single lower low. I hope you're following along. If you are, I hope you can consider subscribing to the channel, because we publish stock market videos every single day. If not, a small smash of the thumbs up would go a long way. Thank you so much ahead of time. So defense is great, but we don't advance or score points unless we play offense. So what's offense? Close over the candle high. So the text, maybe not the textbook, my version of offense just means higher highs. But a higher high is not good unless we actually hold that period. So what I'm looking for is I'm looking for a hollow candle signal an expansion, which means we close higher than we opened. So hollow candles mean we're closing higher than we open. By definition, that's an expansion or offense. But then specifically closing over the candle high, whatever was resistance on the previous session or the previous week is now support, because we take it out and we close over it. So close over the candle high 1, 2, 3, 4, 5 times in a row. And again, this happens every single week, which means we're seeing that data happen fairly fast. Now let's go here to our same pattern. What do we have? Close over the candle high. And now currently over that candle high. That's the exact same note that I had here where I mentioned that we're closing over the candle high. And then over here, we were just currently over the candle high. So these candles move slow. It takes a month for them to close out. But let's go back to our November 2020 pattern to see whether or not this continues to happen. All right, there's our high. Let's actually get in a little bit closer. So let's zoom in, because I want you to have this simple takeaway, because there's going to be so much noise out there. Everyone who has not participated in this rally, who doesn't have the massive gains like I do and maybe others do, they're gonna be hoping and praying that we go down. Why? They want to buy where we did. They don't have the balls to buy. They don't have the gains we do. It's that simple. All right. So close over the candle high, over the candle high. Here we have a higher high. And this candle here is very important, because what do we have? We're playing defense, but we don't have a close over the candle high. We have a higher high, but we fail to hold it, which means the gains are a little bit more muted here. But because the bulls play defense, we're just waiting until they play offense again. So inside of here, technically, maybe a little bit of consolidation, but we got high, higher 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 high, and then a bearish engulfing. By about a point. But the important part is that when we close over those candles high, we get almost an uninterrupted period where we go higher. So the higher high is important, but if we get one of these, it means maybe we're going to get some consolidation. That's exactly what I'm just talking about on the most recent pattern here. So if we remain green in the month, it means we're likely going to be forming a close over the candle high, and we can keep going 500, 560. Yeah, we can definitely go higher, but that's not going to happen unless this candle closes out over 459, but notably 460 in that 52-week high. So if now we dip back down That would likely be this right here. It would be the dip. I understand we're already in December. This pattern's been a little bit delayed, so I'm just paying very close attention to it because frankly, it's working. It's making me a ton of money, and our system agrees. So who am I to disagree with this? So if we do get that move to red in the month and we do not go back to green, it means you just wait. If you're a bear and we go red in the month, you were wrong. Maybe not 100% wrong, but in my opinion, you're wrong. If we do exactly this, we go down, we come back up, and then what used to be resistance actually gets back tested and holds, and then we advance higher. Why? Because when resistance turns into support, we go up, 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 and up more. All right. I hope I've left you with a plan and a story that is so simple, that is so easy for you to understand that you see where we could go from here. And now we're going to look at a couple more quick charts because, frankly, I think that the saying that chips lead tech and tech lead SPY is very notable. All this week we've been streaming, and my goal is to come back again this week to do the market open with you. Massive cup. Let me just go through here, make sure everyone has this story because it is so simple. Massive cup. There's your handle. And then the handle is confirmed that it's a bullish pattern by getting over the previous resistance, which we are over right now. So what does that mean? It appears like tech wants to lead the S&P 500. Here we're looking at QQQ, which is the most popular ETF for retail, but it's not the most important ETF for tech. What is it? It's XLK. Why? Because XLK is actually by Spider. It's a Spider managed ETF. The same one we look at here for SPY. I'll take a quick little sidetrack here because to give you a little bit of education. If we look here, the ticker we're looking at is SPY, which means this is an ETF that tracks the S&P 500 ETF, right? S&P 500 ETF, but it's managed by SPDR or Spider. So if we go back here to QQQ, who manages it? Invesco, which means that a different company is making their mix or the allocation for the QQQ trust or the ETF. This one incorporates a lot more of the NASDAQ 100, whereas XLK is a Spider managed ETF for technology. And this one here has a 50% weighting from Microsoft and Apple, which means as Apple and Microsoft are currently in blue sky territory over their 2022 highs, and Microsoft is just crushing it way above its 2022 high, XLK looks very bullish. And again, what we have here is a cup with a handle, and then we actually go to new blue sky territory. So anyone who wanted to sell XLK or get their money back has already had a chance. And the cup and handle lands perfectly at our all-time high, makes a marginal higher high. But then going back to red, again, going back to what could happen on the S&P, unless we curl back up and turn into support here, like I talked about here on the seasonality chart, this part right here, it means we don't have confirmation this is actually a move. If we get a double top and we don't get the reversal, that's a bearish signal. Why? Resistance acted as resistance. And if we keep fading from there, it's resistance. We only know that in hindsight, though. So we have to understand what part of the cycle or the pattern we're getting into. So XLK, hey, mega big bull. It's not just trying to get back to the 52-week high like QQQ, right? QQQ is trying to gather up steam to get back to its 52-week high here at about 400 something. XLK is already there. It should drag the rest of the NASDAQ 100 over. Cool. So tech's like really bullish, Justin. What else? Well, let's look at chips. So if we look at chips here, same thing. What do we have? Massive cup, got our handle, and then we get a pop over to new highs, and we're holding it so far. We're over the blue sky territory. So if chips lead tech and tech lead SPY, semiconductors are already in a blue sky territory. Technology, if we look at the correct one, XLK, is already in a blue sky territory. What? Is it really that simple? It's really that simple, but here's the caveat. What we need to do is we have to wait until we close out the month of December. We have to see whether or not we actually get this same type of candle forming over here, which means if we've already tested the close of the month, that first part is checked. That should be our low of the month. If we do go in for a delayed cut, there's a few things that could cause it. I'm not going to tell you exactly what they are because I don't know. I have a sense for what could cause it, and we'll go through that in a moment. But at the end of the day, it doesn't really matter. Why? If we want to make money, it's the technicals that drive it. The price, where we buy, where we sell. That's how we make money. So in a lot of words, I think I've delivered a very high time frame chart to give you all the signals you need. We definitely have some warning signs, and that's called we're climbing the wall of worry. But we make money as we climb the wall of worry, and then there's less things to worry about. So what exactly do we have to worry about this week? There's some economic data. The ones that I find to be most important, I think ISM will be important. It's not going to be the most important. ADP non-farm payroll, this number has been so unpredictable for a while that I don't really give it a lot of weight right now. The Bank of Canada, let me pull up an article here because, man, my country stinks right now. My country is terrible. I'm allowed to say this. I'm Canadian, so no disrespect to my other fellow comrades. This is just the way it is. Let's look here to Canada because we have a Bank of Canada interest rate decision. And I think this will be a good preview for the US. So we're looking here for probably the exact same at 5%. Let's look at some numbers out of Canada. Canada's economy shrank 1.1% with rates denting spending. Blah, 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 right? They're talking, do they talk here about the Bank of Canada? Stay on pause. No, they don't talk about it here. All right, so the next article here is actually from Canada again, and this will be important because we're going to be getting that non-farm payroll number on Friday. Finance, real estate, job cuts push up Canada's unemployment rate. The Fed would like to see this, but also does not mean. Sorry, the odds that we're going to be seeing another. Right, we're starting to tick higher. We're at 5.8. It's almost twice as much as what America is. And what this basically means is that I don't think that Canada is going to be hiking rates. What does that mean? It's a leading indicator for what could happen to America when the Fed meets on December 13th. So it's currently December 2nd. Jerome Powell just talked. And let me pull up that article because this one looks like so interesting to me as I look to it. So when the Fed meets on December 12th and 13th, that'll be a Wednesday, December 13th, we'll get the SEP, which means we'll basically get the dot plot. We've talked about this before. But the dot plot is basically all these numbers here, right? They were completely wrong the last few times. So I do expect them to come in and revise it. But how much they revise, what they revise. Do they revise unemployment? Do they revise growth? Do they revise inflation? I'm not sure. When I'm looking here to the rest of the week, then we'll come back to the Fed in a moment. I think that's a good preview. I don't think it's going to move the market. It might impact the dollar, right? USD, CAD, think that might get impacted. But I think the initial jobless claims number on Thursday will be important. We're going to get another hint of Japan being in recession on Thursday. This will be a revision to their GDP. But then we get it's called Payroll Friday. So on the first Friday of the month, right? The first was the Friday. So they're pushing it to the 8th here. We're going to get average hourly earnings. That'll be important. That's the wage price spiral potential. Non-farm pay will be very important as well. But then the unemployment rate is going to be the key number here. Canada's currently at 5.8. Anything below 5 is considered full employment. So if we look back here to the Feds, and let's look back to their SEP from September, the last time we got this dot plot, I want you to pay attention to here because they're telling us where they thought we would be at the end of the year. They told us that real GDP for 2024 would be at 1.5%. Well, if we go to GDP now, it's like a whole bunch higher. Let's look here. Why? Whoa, what happened? Well, Q1, 1.1, Q2, 2.4, Q3, 5.4, Q4, 1.7. It's way above trend. The Fed was not correct on their assessment here. 1.5 is way too low. Unemployment rate of 4.1 for the end of the year. So they revised it down from 4.5 from June to September at 4.1. And we're currently at 4.9. So they're even wrong on that one. The market's too strong. PCE, they thought we would be down here at 3.5. They're also wrong on that. The market is, I believe, at 3.5 right now. Let's actually go back to last week because that's where we saw it. I want to make sure I present the right information here. So if we go back to here, back to the 9th, let's go apply. Let's look at PCE. We're currently at 3.5. So inflation's too high. They're wrong. They're off by 1% on that one. And then core inflation, it's a 2.6. I think I just looked at core. Yeah, I just looked at core. So core PCE, the Fed's preferred inflation gauge, is currently at 3.5. Hey, they're also wrong about that. So are they also wrong about the Fed funds rate? Originally, they thought 4.6. Then they jacked it up to 5.1, which is currently where we are right now. So the reason why this is important is because when we look back here to next week, let's go back to next week. When we get these numbers, it's likely going to be some of the last data we're going to get before the Fed meets on the 13th. Let's actually take a quick look at that to see whether or not we get a CPI print. Maybe we do. Let's go December 1 to December 13, which is when the Fed meets. I think we do get another CPI report. And what's so interesting is that in Europe, it actually went down to 2.9, I believe. Let me double check that too. Sorry for not having this ready ahead of time. I just want to make sure I present the right information. The Fed doesn't care about CPI as much, but the market does. So we're going to look at that right now. CPI. CPI out of the US was last at 3.2. CPI out of Europe, 2.9. That is nice. That is nice. And then it's down to 2.4. Oh my goodness, 2.4. That's awfully close to 2. That's the Fed's target, by the way. So if it comes down to 2 something, man, the market's going to booms. I already know it's going to do that. And Jerome Powell's going to say, victory, right? He's going to say, I did it, guys. I'm the best banker ever. Historical rate rises, no recession, soft landing. Man, I'm a genius. There might be a humbling around the corner, but hey, we'll leave that till later. So on Thursday, December 12th, the day before the Fed meets, again, 2-day meeting starts on the Tuesday. We see Jerome on Wednesday. This last reading for CPI will come out, and that's going to be the last important data point. So we got Friday payroll, then we got CPI on the 12th, and then we got Fed and interest rate decision on the 13th. Okay, so this seems like simple. What you're telling me is that we're going to get a revised dot plot. These numbers here, all these dots are going to get revised, and the market doesn't believe Jerome anymore. So does it even really matter what he says? He spoke on a fireside chat on Friday, and he pushed back on rate cut bets. What happened though? The market pushed back harder. Booms, right? Big booms. If you look here to crypto, oh my goodness. We're making a run for 40,000 on Bitcoin. It's already up by 4.69% on the month. It's only December 2nd. Look over to Ether. It's up by 5%, pushing over 2158, and it's over its previous candle high from the month. And Bitcoin is also over its previous candle high, which means what? Expansion. Risk on, baby. The everything rally is here. So it doesn't really matter, right? Chair says policy is well into restrictive territory. Yeah, I would agree with him. Central bank is prepared to tighten more if needed. I don't believe that, the market said. I don't think you're right about that. We're pushing back harder. It's time to go up. It's time to rally. So the bear fuel could definitely help us out here. Fear and greed is one of the lacking indicators for me. So when I look back to, we can't see it now, but October of 2022, when we had our bear market bottom, we go into extreme fear, slingshot almost in a straight line all the way back up into extreme greed, flatten out, then we go down. We hit extreme fear 1 time, 2 times, 3 times, 4 times, and now we're kind of stalling out here. Pop, flag, pop, flag, pop, but we're not making a new high. 67, 67. It's nice, don't get me wrong. But if the chart's going to advance fresh from here, like we're seeing on Bitcoin for the S&P, which means we're going to repeat the pattern going back to December here, higher high, close over the candle high, right? Close over the previous candle high. That's the important part. So we have to keep closing over the previous candle high, which means the expansion continues. So if that's going to happen, I would like to see this push back over to 70, but notably 75, getting us into that extreme greed territory. All right, so we left you with a whole lot of information. I think I laid out my plan for the month, right? Not just for the week, but for the month. I hope you got a lot of value from that. We're going to go through more stuff this weekend, but if you want to learn more about our Black Friday sale, which ends tonight at midnight, you can now click over here on the right-hand side to learn more about that. You can also subscribe on the left-hand side. We'll be back on Monday morning for the market open. Wish you guys all the best of luck, and thank you so much for tuning in.